Hello and welcome. Today's date comes in that of Thursday, the 5th day of March, 2020. My name is Derek and this is the Money Charts channel. All bets, trades, and of the like within each his own risk and their own reward. For myself, risk-reward management is always job number one. And in the life of having to, invest, have to hold finances, have to hold your money, gold and silver, to me they are the ultimate safe and I think best long-term. Hedges against inflation, as the words used to be stated 12, 13 years ago when I first started learning about things like adjectives like fiat, which would be used before the word currency. Anyway, gold to silver ratio in at 96-1. After having an excitation north of about 90 on February the 25th, it's up 6 points, therefore over 7-8% higher, above the resistance that it encountered in the summer of last year. And if I scroll back on the daily, I guess I'm going to need more periods. Let's go to the weekly. And this line is we're highs not seen from highest from last decade anyway. So let's just wander on to the monthly. Here we are. We're now at levels last seen in the year 1991. February of 1991. So the ratio, it has got itself at highs of 91 plus this. We're talking about almost 29-year highs. I've already talked before about how I think this can go to extreme levels that I thought before could never happen. And this might not be too extreme, but on the upside, it wouldn't surprise me if we do have any moves that come up to this level. I've talked about this a few months ago. I talked about it. But on the downside, not only do I think it can retest these lows or the historic levels, that's also is talked about a lot at the turn of the previous decade on YouTube and different channels around 2010. But even slip below 10, but not only just slip below 10, I wouldn't even be surprised if any of this type of action were to come. And as we move forward, and we'll see what happens, but why would the gold to silver ratio go to 150 first? And let's just take a look at gold next. And within it, it's at, these lines I put in a long time ago, and they're working out relatively interesting, to say the least. And I've pretty much been given the 411 throughout the past several months and years amongst this play. And in here, as I stated within this is just the next key level to the previous high. And on the monthly chart, the previous month of February, it came up to that level and pulled back to end the month. And it's already here on the 5th day of this month, March, already rallied back up to this resistance. And that's pretty much where it's at now, only $8 short at this given time. On the daily time, this is where it gets extremely interesting, and I think this thing is just ready to pop and go. And how big this has got the potential to go. Let's just hold on and wait and see, because as far as the charts are concerned, we can see this big pullback, the 3.6% down day, February 28th, comes down to where it came from the double hit resistance level from early January and again from the end of January. It does it over a 2-day span, leaving it March the 3rd or on Tuesday, a pause day yesterday, doing so amongst the 18 average of highs. And we can see how nicely that it is just breaking out above it. We can see how just several periods just hanging in there like this. And this one and this one, significantly larger candles getting above this level of resistance. This to me looks very, very poised. Maybe we might hit this resistance, come back down to 1648 and break it. Maybe, I don't know. But it does look as if as we move like several days into the future, like there's just going to break through this resistance and then, of course, have a test of this previous high. Switching it off to the quarterly term time frame and taking the Fibonacci lines out. There we can see from, just an extensive, multi-period rally, four quarters in a year. This started in like 2002, going, this went for like 10 years. 10 times 4 is like 40, like 3+ dozen years of extended action above the 18 average of highs. So its rate of ascent was lower than the one that it encountered throughout the second half of the 1970s. but it was most certainly a forcible rally. And the amount that it corrected back was even less than it did before, actually, to a degree, because this was down to 35. So I should be putting it. So I really shouldn't say that because it doesn't have all the data on here. This is the real low back in here was, so it didn't, yeah, it went from here to here to here, now down to here. So in a situation of this correction, leaving, breaking this resistance, how do you do kind of deal? This thing's going to go crazy. And as we can see amongst this, is you come from the lows on this quarter here, you take 2 quarters to rally to the highs, and then now we can see just clearly break it and fully extending it forward, 18 average, which was amazingly moving up, barely going down, sideways, now barely going up. That's the key words, barely going up. And amongst uptrends, and let's just take a look and see what the best one we can put in here. Try to find some key uptrends that if it's going to be breaking, I guess I just got to work on the shorter term. The levels that would connect this, and I'm trying to draw in here, just this. Why is it not doing it? I literally clicked on a button that should make me bring this in. Anyway, the ones that connect this, it's a decent ways off. So if you're looking for an interesting situation, if the price action is to be making a move, and yeah, it's an area that could find resistance, of course it is, but if it comes up to it, and again, it's like I'm pushing like this button here, and it's like not even pushing it. Probably gotta get a new mouse, but anyway. But if it does something like this, and then there we have it. The move of a break of resistance could go parabolic crazy. Situations where you're like, oh, gold just went up 9% today, or just goes to whatever extreme levels would be. But green size candles on the daily chart, weekly charts, and monthly charts would then become extremely large. And I'm going to finish it off with this is just, I mean, not often you're going to get people talking about, oh, what's a yearly time frame, the yearly chart look like? And I mean, I can't give you much data on it, but what we can see here is that this is just a fantastic pattern. During this up run, but again, that's like 4 or 5 times in a row. I have to push it like 8 times just to do this. Okay, so this up run comes down to pretty much the 18 average of closes, and they're just doing this too as well. And all of these years, 4 of them, in which it was hanging in there. I like to say showing strength amongst it, and this is just a good pre-indicate or one of the early patterns or one of the things you're looking for as a setup. But ultimately, you gotta wait, as I say, wait for a clear break above a key point. Well, there we are. We're in those early stages of that clear break. So therefore, the potential moving forward upon this, I just got to think this is outstanding. So we're going to go to a silver next, but before we do that, I'm going to clarify the gold to silver ratio. That 5,000 silver, and I've made a video way back, $5,000 coming soon. And well, depending on your definition of soon, I guess maybe not, but hey, I might be now. We'll see. I'm not going to make a third part because last time I thought it was going to go, it didn't. I made a part 2 video. So I don't know the right information on that. Probably's got a little bit to play today. I haven't seen it, or yeah, gold coming, $5,000 coming soon, money charts if you wanted to watch it. It's old stuff. Anyway, 5,000. Let's just take a look at this. So key level. Now that makes sense just looking at the chart where it could go. Could it do it in 1 or 2 periods? I mean, I wouldn't surprise me if it did, especially with the situation going on right now. I mean, all the stuff I mentioned, like that's been going on, outdated information that is still relevant. The stuff that you could have known and that was available and still in play in 2008, 2010, 2012, that kind of stuff. Then we throw in the aspects of how things have been as far as Federal Reserve, central banks, and what has been done in the previous decade for basically currency printing. And then now we throw the coronavirus and how this is going to affect the situation. This could be a relatively very large type of move. So if we take 5,000 and we divide 100, we would get $50. Or we get 50, yes. That would be a 100 to 1 ratio. If gold was 5,000 and silver was 50. If it was $25 silver, without it would be 200 to 1 ratio. In between this is 37. Let's go into silver, which most certainly doesn't have as bullish of a yearly time frame. $37 would be somewhere up here, which would be a phenomenal move in itself. Obviously, if gold were to have a move to such a venture as stated, the idea that this would be at least breaking out of the 18 average would be phenomenal. But it could work out that gold does go to 5,000, but this just even goes super crazy in the same time. Meaning, gold goes to say whatever number, like 23, whatever, 24, 26, whatever number well before 5,000. Silver is then at 50, and then we have the situation where gold goes to 3,600. Well, now we have silver at 136, and that could possibly be the case as well. But I think it's a first rush into gold amongst the situation, and then thereafter that, when silver takes off, things could get very, very interesting. When it has its leaving of what has been several years in this 18 average, we can see that it, and this is the entry. I'm not going to count this. So 1, 2, 3, 4, 5, 6. This is year number 7. 6 completed. It's been a long correctionary phase. It has thus held this. It is not broken out. Gold, of course, has, and we can see in the ratio that it's, of course, been dominating, especially recently. On the monthly time frame, this has been the interesting one I've been looking at for quite some time, where we have this magnificent rally, the 20, and this type of stuff could be happening again. We could get the same sort of deflation, especially stocks go way down. We are seeing a lot of it, 400, 500, 800 point days on the Dow every single day now. If the Dow does the same thing, we could have a repeat of this. Maybe it comes back down and we retest these lows before it comes back up again. And maybe it even comes down to 10 or 11. It just has a sick move. And then this happens. I hadn't thought about this before. I'm thinking, do I buy some silver now, knowing that maybe Bitcoin will go down more, and then it's just a better buy now because I'm going to probably want to use cryptos to buy it. But maybe that won't happen. And maybe I'll be able to get... I'll just have to wait through and then see when, because I'm going to believe that there's going to be a good chance cryptos will do well. And one easy way easy way, I can't really say that's the best word to use there, but one way, if successful and getting a lot, is what you could do. I'm getting a good return, that is using cryptos as a trading vehicle and then turning those cryptos into things like silver and gold. And that's how much you can get on the dollar. If, of course, things work out, the cryptos that you pick, the trades that you make out, there's places for both Americans, Canadians, I'm not too sure about, or other parts of the world, but definitely the United States and Canada, where you can physically buy, you forget the physical, but you can buy the gold, buy the silver, pay with Bitcoin, LITECOIN, Bitcoin Cash, whichever, either way. It's things that are available. But amongst this, after getting out above this, it's been a successful correctionary phase. Stage number 2. This has been a long sideways reaction. A real attempt here to break out above didn't happen. So now if it makes it above again, like we see it like 18 and change, 18 and a half and higher, it'll be yet another one, but it still has to get above these layers of resistance for you can start to say, okay, this is on this time frame, that's the monthly, in a full-fledged, in a bull market, let alone full-fledged, in a bull market. And thus, in the situation where we should have a very good rate of ascent, this is nothing, something like some sort of higher rate of ascent, like we can see in here. And then just maybe find, and have a big move to the next key level, which is like around 28, 29, 26 in this ballpark area. Things like that would make a lot of sense. But it's been taking a lot of time, pretty much the entire second half of the previous decade, we can see doing this. And even all of this was just a lot of sideways motion in from 2012, 13 on kind of deal. We've had a lot of choppiness here within this weekly time frame. A lot of the stuff in here, you can see 2017, 18 doing all this. A little bit of a dip move in here, double bottom, breaks out, and then just staying in the same range that it's been going into, like 27, 18, 19. And now we are encountering an extreme outside week last week, as we had the price action. An outside week represents a high, which is higher than the previous one, and a low, which is lower than the previous one. But this isn't just I guess I use the word extreme on it, but I mean, this high was one not seen, like literally since, well, let's just see, this high comes in at almost 1890. This one comes in at 1892, so marginally beating that. This one comes in at 1884. So this is a high that mathematically was the highest one since this one in here, a couple dozen or so. And then this low was just ones before that. And of course, all the market conditions make sense for it to happen. But either way, whether you look at just the chart knowing, okay, big volatility is coming, or know that the market conditions are there, that's just that, big volatility. We're seeing that something like this could be, it's just a spark for things to get really interesting moving forward. Okay, so let's take a look at, let's just finish off silver by taking a look at the more shorter term, and then we'll call it a video. And I'll insert these Fibonacci lines that I've had in for quite some time. I mean, I was putting these Fibonacci lines as it was coming down to this in September. The 1613, of course, never hit. And again, for the second time in a row. How that is interesting, and that is odd too. But with that being said, we've had the price come down at this point, rally fast within the daily, back up to 1740 fib on March the 3rd. A pause day yesterday, and it's battling it pretty nice. Looking as if it, based on this, should be ready to take it out. But the hourly time frame on here, I know it's not the best of looking candles, but it really actually paints it out really well. We can see how this level of support right in here, resisting from here, supporting in here. So any future breakouts, which, I mean, 1740's got the line or whatever, I'd be looking for 1725 to where 1745 to be resistance. But is that what's going to happen? Breakout? Well, this pattern in here, I think it looks almost like you're drawing it in type thing to say, oh, what's the perfect? You go up, you do just drawing a perfect sideways consolidation, and how about a little extended one, which is more than a little? Well, I can't say that I've seen more than that. But then you have the breakout here, 7 o'clock this morning. And then the instant red candle move down, the first correctionary move. But how does it react to it? We can see here 1, 2, 3, 4 periods of, actually 3, because we're just starting this hour. We're only 3 minutes and 30 seconds in. It's 12:03. So this thing, to me, looks like a very, very, very good setup moving forward. Thank you for tuning in. Have yourself a great day. Bye-bye.